Thank you for joining us today for our Electronic Retirement 101 sessions. This is session 3 of 4. Today's topics will include website navigation and contribution reporting. Without further ado, Beverly Snyder, the Account Services Manager.
We have a couple of reports that we provide to you on our website for ease in administering the retirement plans that I want to point out to you. If you are looking again on that Employee Management Center down that left-hand side, the first one that you will see under the report section, the Tier 2 Election Report. Now this report is again specific to Tier 2 employees, and we're talking about those employees that are in their first year. And again, remember we talked above, they have to make an election between the hybrid plan and the defined contribution plan. This report tells you which plan they are electing so that when you're reporting them on your contribution file, you know how to report them. This report is provided to you on the first business day of each month. That's how you know how to report them correctly. The next report that we offer to you is the DC Deferral Change Report. This report provides you information regarding when your employees make payroll deduction changes for deferments or installment loans. So you're going to get this report every Monday, and you're going to get it in 2 forms. You're going to get it in a PDF form if you want to print it and enter your changes manually, or you're going to get it in a CSV file, which might be able to talk to your payroll. So I encourage you to look at this every Monday because we test this in our compliance audits. If I go online over the weekend and tell you that instead of taking $10 out of my check for my 401k, I want you to take $100 out, you're required to report that correctly to our retirement office. This is how we provide you that information. And when we talk about installment loans, your members don't have to tell you when they come into our office and do an installment loan with their 401k or their 457. We provide you this report to let you know, hey, this employee has taken an installment loan. Here are the payments that we need you to start submitting to our office. And that's a payroll deduction. You include that installment payment on your contribution file coming in. And on the flip side, you would continue to withhold those deductions until you got this report showing a 0 balance. Okay, this pay period, we want you to withhold $0. That means the member has paid the loan off. Don't ever stop those installment loan payments until you get that 0 from us, because if your employee comes and says, hey, I think I've paid my loan off and they really haven't, and you stop the payments, then that member could go into default. So again, every Monday, if you log in every Monday and you don't have a report, that means that none of your employees made any changes and you're good to go. Now let's move in. We've talked a lot about the money, so now let's talk a little bit more about the contribution reporting process. When you send your contribution files into our office, it's not as easy as just hitting a button and saying, here's everything, we're good to go. Your file goes through quite a process once it comes into us. So you submit the file to URS, we upload those files and make them talk to our system at the top of each hour. We have one individual who is dedicated to doing that. He verifies all of the information, verifies that it's complete, and then you will receive that email saying, okay, we're good to go. Go ahead and submit your ACH. So you submit your ACH payment. That's when the posting process starts. We will never be able to post a file and put money into your member accounts without your ACH payment coming in. So if you have members that are coming to you or calling us and saying, well, we got paid on Friday, why is my money not in my account? And go back and look at when you submitted your ACH payment. That has a huge impact on when the money gets posted. So the posting process starts once your money is received. Once we take that file all the way through the posting process, that's when your members will be able to see that money in their account. Now, a couple of things I want to point out. Number one, everybody has a specific posting individual that works on your file every single time you send it in. It's not a different person every single time. And as your posting tech post your file, if you have any errors on your file that would prevent them from posting it, a lot of the times they're going to have to come back to you to make corrections to your file. So I'm going to encourage you, if you ever get a phone call from your posting tech or an email saying, I had to make these changes, or I need your help verifying information, they cannot post your files until they are perfect. And so I want to talk about some of the common reporting errors that we see that would keep your posting tech from getting that file posted in a timely manner. They have 3 business days to post your file. So here's where they may need your help. Number one, if you don't have individuals certified correctly on that file. An example of that might be you certified that person ineligible with our office, and now you're trying to report contributions for them. Our system isn't going to let you report contributions for an ineligible person. So we have to match when it comes to the information that we have on these employees. Now, marital status would make a difference. We use 4 codes within our system, and it's single, married, divorced, and widowed. You have to use one of these 4 codes. So make sure that if you use other codes within your organization, that's great, but our system will only accept one of these 4. Again, maybe you have me coded incorrectly. I'm a post-retired employee and you've coded me exempt. E means eligible, I means ineligible, P is post-retired, X is exempt. I can only be in one place at a time, so you have to have me coded correctly right there. The next thing that would cause an error is not including the mandatory 401k money for those Tier 2 employees. Our system is expecting that if you have an employee coded as Tier 2, so that would also throw up a fatal error in our system. Duplicate records would be another example of a fatal error. If you've got me on the file as an ineligible employee, and then down at the bottom, you've got me as an eligible employee. Again, in our system, I can only be in one place at a time, so you can't have me on the file twice in 2 different categories. Next, maybe you have the fund coded incorrectly. Maybe I was a public employee in Fund 15 and now I've become a public safety officer and I'm in Fund 42, but on your file you haven't changed it correctly, so coming into our office it's not matching. Now what happens anytime any of these are incorrect, your posting tech gets a fatal error and they cannot post your file unless they go in and correct all of this. Now, some of it they can correct because they know the information and they'll go in and correct it for you. But if they don't know what's causing the problem, what has gone on with that employee, that's when they're going to reach out to you and ask you for your help. So as we're talking about common reporting errors, there's one thing that I want to point out for you, and that is your employer support technician is only supposed to be making corrections to your files 3 times. So what that means is if you're sending a file in and you have a wrong marital code or maybe an incorrect code on your employee or an incorrect fund, whichever the mistake it can be, and you submit it time after time with that same error on there, the employer support technician is only going to be authorized to correct that for you 3 times in a row. Each time they make that correction, they're going to send you an email and say, hello, employer, here are the corrections that I had to make in order to get your file posted. Then they're going to ask that prior to submitting the next file to our office, you go in and make those corrections. That way, when your file comes into our office, it is correct, it's ready to go, and the posting process for that file is not delayed in order to correct the mistakes on the file. A few things that I want to point out when we're talking about submitting your file to our office. Number one, we need you to report in the same frequency as you do your payroll, meaning if you are semi-monthly, you're reporting to us semi-monthly. If you're bi-weekly, you're reporting to us bi-weekly. We need you to report to us by period and date only. The date that you put the money in the bank or the date that you hand your employees a check is not of any value to us. We report everything by the pay period and date only. We need you to report current pay period earnings only. So if I worked for 2 weeks, you're only reporting those 2 weeks, what I've earned in that 2 week period on that current file. Anything outside of that pay period would go through your adjustment tech. We have a team of account analysts, and their only job is to help you with any type of adjustments that you need to do on those member accounts. And we're going to talk about adjustments here in just a minute. The next thing, no negatives on the file at all. If you are reporting a contribution file and you're telling us that a member made negative $500, then we are assuming that you are doing some type of an adjustment on that current file coming into our office. And again, we don't make adjustments in the current file. Those go through the adjustment process. Next, we need you to submit your files in order. We cannot post your files in our system if they come in out of order. So if you send a file in for April 1st and we haven't received March the 15th, we can't post April 1st until you send March 15th in. Again, all employees on the file must be certified. If you have a new employee and you haven't certified them yet, but you add them to that contribution file coming in, your posting tech is going to get a fatal error because we don't have information on that employee because you haven't certified them. We can't post money anywhere where we don't know where to post it. Really important that when you have new employees, get them certified before you send the file in. Something to remember, your Tier 2 ineligible members are always in the DC fund, and we encourage you to verify your employee tier and fund information. Verify that it's all correct before you send that file to our office. When you're reporting, here's some of the information we have to have you report. We need to have the gross salary and the retirement salary. They may not always match. You may have things that are in your gross salary, like reimbursements, that would not be retirement eligible salary. So it's okay if those two don't match. We need you to put the hourly rate in there. We prefer that you put the hours worked. Down at the bottom, you'll see all of the savings plan information. Off to the right there, you see the contribution calculations. This is a compensation table. This is going to tell you when you are reporting your retirement eligible salary. This is the chart that's going to help you determine what is eligible for retirement contributions and what is not. You'll notice going across the top, you've got the retirement systems up there. Down to the side, it'll give you some information on what's reportable and what's not. A key rule of thumb to keep in mind in the public employee system, all earnings are reportable. Overtime would be reportable, bonuses would be reportable, all earnings. Again, we've talked about the public safety and the firefighters. They are limited to their base hours only and a performance-based bonus. You would never report overtime. You would never report extra work for extra pay for public safety or firefighters, but public safety, all earnings are reportable. You do not report any type of a reimbursement, a cell phone, a uniform, a tuition reimbursement. That is not reportable compensation. We have a webinar in our Knowledge Corner that is very, very specific to nothing but reportable compensation. I encourage you to go watch that. It'll provide you a lot more detail on reportable compensation than what we're covering right here today. Okay, now we've talked about how your contribution file comes in. Now let's talk about the importance of reporting correctly for your employees. A couple things can happen if you don't report correctly. Number one, you could be removing service from your employee. Number two, maybe your employees are not become invested in the correct pay period that they should be. An example of that would be I hire on for you effective September 1st, and you have a lag system and you don't report for me until October 31st. So I've worked for you all of September and all of October. You report me on that October file, and that covers the month of October. Even though I worked in September, you're not giving me service credit for September. So I earn my service credit based on each pay period that you should be reporting for me. So if I hire on for you and my hire date is September 1st, but you don't start reporting for me until October, not only are you removing service, but you're also impacting my vesting period. I should be vested after 4 years, which would be September 1st, 4 years from now, but because you didn't report for me in September, now I'm not going to become vested until 4 years from October. Let's talk about the vesting period specific to school districts right now, because school districts work based on the school year. Contracts start on September 1st, go till the end of the school year, and then September 1st, it starts all over again. Now, even though you're a school district and I'm only working September until May, I'm still entitled to a full year of service for working at that school. But if you're not reporting correctly for your employees and they're not earning their service correctly, you're relying on URS to do what we call a service role adjustment. We don't do that until March of every year. So if you, the school district, are not reporting correctly, I should become vested on September 1st, 4 years from now, but because you're not reporting correctly, I now have to wait to vest 6 months later in March when URS does their service role adjustment. So for the school districts not reporting correctly, you're actually making those employees go an extra 6 months to become vested. So now let's break this down and talk about how we fix this. Let's talk about a contract period. What is a contract period? A contract period is the number of periods per year that I am going to have a paycheck and contributions submitted to URS for me. The contracts are all reported on the contribution file, and one thing you want to keep in mind is the contract periods could be specific to each employee. It's not just a general overview. So let me give you an example of how these contract periods work. If I work for your agency and you pay your employees on a semi-monthly basis, that means the contract period would be 24 because you're receiving 24 paychecks per year. When you submit that 24th contribution file for your employees, that's a full year of service that they're going to receive. But what if I work for you and I am your judge and you are semi-monthly, but as the judge, I'm only getting paid once a month? My contract period wouldn't be 24. My contract period would be 12 because then you submit 12 contributions for me, and on that 12th contribution, I have 1 year of service. Let's go to the school districts. If I work for a school district and I elect to have 12 contributions per year, so I'm taking my salary, dividing it by 12, which is very common, my contract period would be 12 if you report monthly. At the 12th contribution, I have my year of service. But what if I'm a school district employee and I choose to only get paid on a 9-month contract? You're a monthly employer, 9 months per year. If you have my contract period as a 9, then when that ninth contribution comes in, I automatically have my 1 year of service. You are never relying on URS to correct that for you. Your employees are earning their service in the applicable time that they should be earning it. So make sure that you're looking at your payroll and running your finger down, and any of your employees that are not being paid on your regular payroll schedule, you need to change that contract period so that they are earning their service when they should be earning it, okay? Next, let's talk about contribution reporting. You are required to report all earnings in the period for which they are earned. We just talked about that, remember? You are only going to report for the pay period that you are reporting for right now. Anything outside of that current pay period is going to go through our adjustment process. Let's look at a couple of examples, some of what we've talked about here. So if my hire date with you is September 1st of 2012, look across our example here. You didn't report for me in September, even though I worked the whole month of September. So what happens out here on the right, I get no service. At the end of the year, I am not going to get my full service that I've actually earned by working for you. I want to explain what you're looking at right here. This is what we call a salary statement in our office. So the name of the employee goes at the top, the unit would be the employer. The dates that go down the side right there, those are your period end dates. We don't put those dates in. Those come from you. The middle column with the amount in it, the salary amount, that is the retirement eligible salary that you are reporting to the retirement office. That is another number that comes from you. When your file comes in and we post that salary for that period end date, our system automatically plugs the service in out there. The employee will never receive service if you don't report correctly. So what should this file look like? Here's what it should look like. If I hired on for you on September 1st, I've got money sitting out there for the month of September, and therefore I receive my service. It's really important that you're reporting for your members in the correct periods so that they are accruing their service in the right way. Something else we want to talk about today, never lump summer month earnings, contract payouts. Don't lump money together into one contribution file. Again, we're going to go back to that service. Here's an example of what we don't want you to do. It becomes the end of the school year and I am going to be out for the summer. So I have a contract through the end of the school year. So you're going to pay me for June, July, and August in one pay period. You can do that. I can receive all of that money at the same time. But do you see out to the right what happens when you put it? You're paying me for 3 months, but out to the right, I'm only receiving service for 1 month. How should you handle this? Let's just keep going here. This is what it should look like. I can receive my $17,000 all at one time, but I need to have it reported to the retirement office in the period that it was specifically for. So the month of June, July, or August. If you report it by the month that I would have earned it or it's earned for in my contract, you'll go out to the right. See right there, I'm getting service for each month. If you lump it all together and report it all together, I am not getting my correct service. This is what a salary statement for a 10-month employee would look like. So you are going to report 10 contributions for me, and once you report that December 31st, 2016, I've got my 10 months in, look what happens down there in the corner. I have a full year of service. So the contract period is very important because it's going to determine how and when my service gets posted.
Thank you for joining us for session 3 of 4. We hope you found this information valuable. Please join us for session 4, which will include adjustments, statute of limitations, leaves of absence, and records retention. If you have any additional questions on any of the topics that have been discussed in this Retirement 101, please feel free to contact one of us in compliance. Thank you.